Hello everyone, today we're going to be talking about the difference between the stock market and the real market. What is a stock market and what is a real market? A real market is what we see other businesses on the road. So when we go to the mall, for example, we see restaurants like McDonald's, like Cheesecake Factory, like KFC, all of these stuff. And we see also brands like H&M, we see Gucci, we see Versace and all these brands. This is a real market. The stock market is a place where all these companies like McDonald's, like Coca-Cola, like Nike, like Gucci, all of these brands and restaurants, they list parts of their companies in the stock market for the public, for the people, to be able to buy shares or parts of their companies. Here is the real market, where we have McDonald's, and we have Gucci, and we have Nike, and we have, what else? Cheesecake Factory, right? So here, you are buying these companies' products. So in the real market, you are buying, you're shopping for a burger, or for a belt, or for a shoes, or you're going for lunch or dinner, right? So this is the real market where these companies are offering their products. Stock market, however, is a place where all these companies list shares of their company in the stock market for people to be able to buy shares in them. So let's say if we divide McDonald's into 1, 2, 3, 4, 5, 6, 7, 8 parts, okay? So these parts are called shares. You can buy, for example, 1, 2, 3 shares of McDonald's. So the stock market is a place where these companies are listing parts of their company for public people, for the people, to be able to buy shares or parts of them. What's in it for the companies? So they are raising liquidity. So when they list parts of the company in the stock market, they are increasing the liquidity, because when we as people, when we buy parts of these companies, we are paying them to buy these parts. So we are providing them, we are paying them dollars, right? So we are paying them money to own parts of their companies. So it increases the liquidity for these companies. What's in it for you if you are buying shares in the stock market? So when you do your proper analysis and you find McDonald's is a very good company, it has been profitable over years and it has been paying dividends, profits for the shareholders, and you did your analysis and you think McDonald's still have a future and it's gonna be there for the next 5, 10 years, let's say, so it's a good investment. So you buy some shares. Let's say today the price of one share was $20. So you bought 5 shares for $100 in McDonald's, right? And you hold it for like 2-3 years. Then after 2-3 years, the price of one McDonald's share became $25. And you bought 5 shares. So you made a $25 profit. That's a very, very simple and basic example about the difference between real markets and the stock market. So the real market is a place where these companies are selling their products or offering their services. The stock market is a place where these companies are listing parts of their companies for people to buy shares in it and be able to trade their shares. Thank you so much for watching this video. I hope you find this useful. If you like the video, put likes and share it with someone you think would benefit from it. And I'll be sharing more of the interesting stuff about the stock market and investing in it. Thank you so much, and see you again.